Welcome to the Market Momentum tutorials. This is number 5, so on momentum triangles. And when you watched all the tutorials, please come to the website. You'll learn more by listening to the video reports, and you'll also discover levels to trade at you will not find on normal charts.
Welcome to the tutorial on momentum triangles. There's a little picture here back from 2001 too. It's an old one I did. And we'll have a look at some current charts, see if we can find some examples. Last year we had quite a lot of triangles in the market. This year there's not been so many. I got a couple of examples I can show you. But essentially a momentum triangle is actually an ABC movement. It's a C leg coming out usually. And here you can see it's not, it didn't quite make a C leg. It did on the momentum ranges. It made a C leg on the momentum range, but it didn't on the daily average diff. It probably would have done on the ordinary diff. And this is where they're slightly different. They have slightly different wave counts, as if you remember from the wave count tutorial. Now here on the momentum range you had a flat triangle, and here you have almost an equilateral triangle in a way. And as the market's developed, it's bouncing off a triangle line, and when it breaks out, as it does here again, if here it would be 2 days, and here it was just 2 days that closed on there, was pointing up sharply 2 days in a row at the time and made its move. When it breaks out of a pattern like this, although it's probably an ABC movement, when you see these developing, because it's not always, I haven't seen that many this year to be honest with you, you watch out for a sharp reversal in trend, because the usual reaction is, oh, it's going higher, it's broken up, but you get a sharp reversal. It's usually a sign that an end of trend, whether it's a short, medium or long-term trend, and you can see a rapid change come about very shortly after the breakout of triangle. This also happens on major trendline breaks. You'll see the first time a market breaks a trend line, it will reverse and make new highs, for example, if it breaks to the downside, and then come back down and start to go down. But we'll cover that in momentum line tutorials. But for now we'll just look at triangles. This is a short tutorial. You can just see the general picture here. It's broken out on the momentum range and on the diff. They both had triangle pictures. They don't always. And you can see the sharp reversal in trend that happens afterwards. And this also happens if you watch the expanding momentum range video. At the end of the expanding, as the expanding momentum wave narrows and comes to an end, it's virtually, it is a triangle, and it does exactly the same sort of thing. It's a sign of an end of trend. Now let's see if we can, I've got 2 or 3 examples I think I found. Let's have a look. Here on cable, on sterling, the daily range, we had a breakout of a triangle formation. As you can see, it was building up and literally only pushed through for 1 day. It was back within the triangle the next day and immediately reversed, and it was also a sign that a potential end of trend. As you can see, this is the 9th of August 2010 here, and if we go to 9th of August, you can see change of trend. Here again, on the yen weekly range, we had a triangle that was building up here, and we had a breakdown out of that triangle, which in fact was an ABC movement. And for these are really for people who don't want to do the ABC. Sometimes they see this pattern. It was end of a C leg, came out of a triangle formation and reversed its trend. Now that doesn't look like a huge reversal in trend, but if you look here, bang, we had a decent reversal in trend over a number of weeks. And the last example I'm going to show you is one that was an even shorter turn in trend, but the thing was, it was actually like 700 point moves in a week. So gives you an example. You got the triangle building here. We have got our ABCs, we have a B, and again you see the breakdown was the end of a C leg, and you can see another triangle building here, in fact, and it's just tipped out of the top end and it's starting to reverse back down, going into the beginning of November. So we'll have to see how that works because it's closed on a momentum line. But here, as you can see, it had the one-day snap down where it broke the triangle, and that was between, well, you can see where it is. It's between the 9th of April and the 18th of June. And here was the breakdown on the triangle and the snapback, the very rapid snapback. And as you can see, that's a 600-point move. So it may not look like a major reversal trend, but even for a short-term trend, 600 points, you know, if you'd gone short based on that break, you would have got screwed. So when you come out of a triangle formation like that, be very careful on a sharp break, because the market will reverse straight back. As you can see, the next week it opened back within the triangle, which was not far off its lows, but it went back inside the triangle and immediately slammed up and broke the upside part of the triangle. This is a slightly thicker triangle than normal, but it just goes to show you what sort of shapes you can get out of these. And this is the same thing. We've had a little break on this top end of this triangle here. I mean, it's the end of October. Two weeks out of it. It wasn't a very big break, but we are looking for a top, so we may well come back down. And this is a bit of an odd count, really. It's not, you can see how erratic it is here compared to normal trending markets. So those are just a couple of examples. I haven't got many more to show you. If I'd done this video last year, I'd have a lot more, some really big triangles to show you. Bonds had a really huge one last year that was fantastic, and it broke out of it, snapped up and slammed all the way down. So just to quickly recap, in this particular example, which is quite an old one, but I'll show you some recent ones. You had a flat triangle on the momentum range, you had a normal triangle in the average diffs, and they both broke up, and immediately within 2 days had reversed itself and started a new trend down. And here you can see that's which is literally within a day it started, but it gave you plenty of time. In this particular case, when it broke out, it opened below a momentum range trend line, which happened to be the day of reversal, which is where you would have sold it that day anyway, and you'd have seen yourself coming back inside the triangle, and you would have been staying short with that on a daily average diff trade if you were just doing average diff trading.